In this video, we're going to talk about the Fibonacci sequence and how you can use that to give yourself a trading edge. What's going on, everybody? We are back with TradeUI, and in this video, we're going to talk about the Fibonacci sequence and how you can use that. And when we talked about trading, we're going to talk about the Fibonacci Retracement series. What the Fibonacci Retracement is wherever we see an impulse move to the upside or the downside, we'll see a little pullback, and we'll know exactly when to get on the pullback to ride that momentum up even higher. So this is a tool that you can utilize whether you're a swing trader, investor, or day trader. It's seen everywhere. It's also seen in the observable universe on how the Fibonacci series intertwines everything together. So if I actually go to my chart over here, my screen over here, you'll see the Fibonacci sequence. So the Fibonacci sequence is just a mathematical computation where you add two numbers and then you get a result. Then you add the result with the past number to get the next result, and so on and so forth in the sequence. So what that means is 1 plus 1 is 2, 2 plus 1 is 3, 3 plus 2 is 5, 8 plus 5 is 13, and so on and so forth. So it's funny that you actually see this in flower patterns. You see this in the observable universe, how they actually grow and grow and grow. And you also see an actual conch cells, as well as there's a hurricane on here somewhere I saw, but it's also in spiral staircases. We're always noticing the Fibonacci sequence in our everyday lives. That tells us that, hey, can we apply this to the stock market? Back in the day, we didn't know. But now that we have these tools and we've had plenty of time to run through and see how accurate it is, you actually do see patterns utilizing Fibonacci sequence when it comes to day trading, swing trading, and long-term investing. Because instinctively, you got to think here, right? I'll show you charts here in a second, but news comes out in the stock and the stock shoots up. It's not going to keep going up and up and up and up. You're going to have people selling, taking profit, and then you're going to look for a buy the dip opportunity to ride to the upside. But we don't know how low the dip's going to go. Well, we actually kind of do, because if you apply the Fibonacci retracement tool, that gives you psychological zones to where people look at it and say, hey, you know, that sold off enough, I'm going to get in right there. So we've actually been able to line up the statistical, psychological buy the dip zones with Fibonacci sequence. And we've found a correlation, not me personally at TradeUI, but traders over the past 50, 60 years, whenever the Fibonacci tool is actually started to utilize, and we have graphs to plot and mark everything, they have noticed these sequences. So if I actually go to my chart, I'm going to draw some Fibonacci's and show you just how powerful this is. So let's start off with a day trading setup. So a swing trading setup. So swing trading and long-term investing, you always want to buy dips on good stock. Say NVIDIA ripped up like crazy this past year and had a big move to the upside. And if we go here, I want to show you a few things first. First, let's zoom right here. Let's zoom in here and focus on this area. So to draw Fibonacci retracements, I go to drawing tools, I look at the percentage sign right here. Different platforms have different ways to pull it up, but this is how Thinkorswim does it. I found the high right here. I found the low right here. So imagine, you know, we're trading and it's 3:25. Say it's March 25th and NVIDIA's starting to get that news and we're like, oh man, AI is here. We should look for buying opportunities. Well, I don't like to buy high. I like to buy on discounts. I like to buy discounts and really ride to the upside. Well, as you can see here, there's a few lines that you notice on the Fibonacci retracement. We have the 100, the 61.8, the 50, the 38.2, and the 23.6, and the 0. If you draw this, you'll actually see a bunch of red lines. I've actually changed this, so if I double click it, kind of ruined the math, ruined the fun right there, right? But look, if I double click it, you can actually see the coefficients that you can input. I take off the 78.6 because I don't really like utilizing that personally for my trading strategy, so I don't have it on there. But I've colored the 61.8, the 50, and the 38.2. And what it is if you see, this is a great representation actually. So Fibonacci has a few levels. The 61.8, the 50, and the 38.2 are the ones we want to focus on. 61.8 in between 50 and this zone here, that's what we call the golden zone. Basically, this area is where you see great pullbacks where you can actually buy a good discounted dip, but also understand that the rally is still in place. Because there's times that stocks are going to keep dipping, and you're going to think you got in at a good time, but in reality, you didn't. So we got to figure out, hey, is this a great entry point? Well, the great thing about Fibonacci retracement is how it works. It'll take the high of the move and the low of the move, and it'll calculate retracement percentage pullbacks. So if it pulls back to 61.8, that means it pulled back to about 61% of the overall move. Same thing with 38.2, it pulled back to 38.2% of the overall move. You might be asking, well, how do I utilize this for trading? Well, if you're a bull and you see a bullish stock, you want to see it hold the 61.8 zone. So if it holds the 61.8, you can statistically tell yourself, hey, this thing's going to keep going. So conservatively, you target 100. 38.2 is the same situation to an extent. If it holds 38.2, it tends to kind of hold that rally, but not nearly as strong as 61.8. Because remember, a strong rally needs a little pullback to really keep going. You don't want to see it pull back, and be like, oh man, this isn't a dip, this is a thing crashing. People are done with this stock. Well, that's why I really prioritize the 61.8 zone. So, how do we maximize it? Well, if you go back and look, as you can see, once it touched 61.8, it went up higher. It actually went to another line up here that's plotted automatically with Fibonacci retracements, which is the Fibonacci extension. The first extension level is 161.8, telling us, hey, that's a good target for long-term investing when it comes to using the Fibonacci tool. As you can see, it lined right up to it. It went to that 161.8, and then people started selling it off. But just because that happened doesn't mean it's done yet, okay? Because there's two ways you can really utilize this tool. One is you can set up on the year-to-day high and the year-to-day low, or you really want to try to find a swing high, swing low, which right here, this is the swing high, swing low. But before we do that, you see how it lined up with the 61.8 again right here? So let's just draw another line, you know? Let's utilize this 101 mark thinking, hey, this is pretty bullish right here. So if I go to Fibs, and I draw another one, I want to line up my top with the previous bottom. All right, so very powerful here. Remember how I told you that 38.2 is also a very powerful zone? Well, what this tells you is anytime it tests this 38.2, you're typically going to see a run up to 61.8, maybe a little bit higher. It's not nearly as strong as holding the 61.8, but it does give you a good entry with limited downside risk. Because, I know it's hard to see here, but if I do this, my 23.6 compared to my 38.2 here, if you stop out under 23.6 and you target 61.8, the difference between 38.2 and 61.8 is larger than 38.2 and 23.6. So you will always win a little bit more than you would have lost if you utilized 38.2 as an entry as well, and you stop out 23.6. But understand that there's multiple strategies you can utilize. I don't want to get too complicated here, but you can see where these are lining up that you could have got in right here where it's a great entry, because the fact that this is lining up with this is going to tell you that, hey, this thing could keep going. So this is a good thing to look at when it comes to long-term trading. You're like, I don't know if Nvidia is a good buy here or not. You know, everything's selling off. Well, the fact that it held the 61.8, came back, tested again, and held it up again, and that happens to line up with another Fibonacci level, this is just where everything starts to correlate with each other, and you're like, hey, this is a good buying opportunity for a long-term trade on Nvidia. But now you might be asking yourself, well, how do I use it for day trading? Well, let's go to a smaller time frame. Let's do 5 day, 5 minute. Let me see. Trying to think what I want to look at here. So there's not really a big impulse anywhere. I do see just trading in general. Maybe go up to a larger time frame. So nothing really big that happened news-wise this past week, just touching that 100 zone. So let's go to an earnings play, all right? So I know Dash had earnings. Let's look at Dash. Okay, perfect setup. So this is what I mean by an impulse play. You see how it just shot up really hard and heavy on one candle in 20-day 1 hour? This because earnings came out, so this is a great opportunity to use Fibonacci retracement. So if we find our high, and we draw our low, and technically it's used pre-market low. The reason we're using pre-market low is because this high happened post-market due to earnings. So you think, okay, let's do the earnings spike, not whatever happened the day before. So let's look here and see what's going on. So it came down, market opened up, and it looks like it broke down and spiked up. So it validated the 38.2, and as you can see, it's holding this area here. So you could have got in on 38.2, stop out 23.6, target 61.8. That was a quick day trade to where you would have risked, looks like you would have risked roughly $2.50 to $3 to make $4. So that's a great situation where you had a great risk reward ratio. You could have got in right here and taken profit. But while I'm here, let's look at the long-term chart. So the long-term chart looks actually pretty solid here on Dash. And the reason I'm saying that is, let's draw this out even farther, and let's draw the fibs on our high of the year and our low of the year. All right, who sees a pattern? Because I see something very powerful here. First, the big move came back. We held that 61.8, but then we crashed down, so we didn't really get to hold that one. However, as we come back to this 38.2, we're thinking, all right, there's something coming out here. And we had a big impulse move to the upside, and if you look right here, you see where the 38.2 on the smaller fib we drew lines up with the 61.8 on the larger fib we drew. So come back here and let's look at it. Why didn't it hold right here? Well, there was a news catalyst to the downside, guys. It was earnings. You see, earnings came out and the stock gapped down. And people are like, well, that might be a good time to start entering long in the longer term. But for us, we really don't want to catch a spike down like that or an impulse down. We want to see the stock kind of bleed down. We don't want to really see a big gap down. We want to trade gap ups. The reason we trade gap ups is because we're bullish traders. We're trying to buy. So we want to see good opportunities to buy on a pull back from a gap up. Makes sense? We want to catch that impulse and ride that impulse to the next high on it. So understand that here on the long-term chart, the reason this wasn't a good idea is because earnings. So we really don't want to worry about 61.8 in the long term at this particular point in time. We do want to worry about the longer term 61.8, which has broken out right here. So this is actually bullish activity for Dash. You can see 115 lines up with that one, and our smaller term chart, if I go here, it lines up right here as well. So this is a great area to load up on Dash. And as you can see, we had a little buying selling action going on. A little battle against the bulls and the bears again. It looks like bulls are winning, and we broke out to the upside to where you can see Dash potentially not only go from this 114, 115s on the 126. You could also see this as a long-term play going to 137 to even 145, or potentially all new all-time highs. Personally, I'm a little more conservative. I like to target that 100% and get out. But here in this kind of situation, if this were to pull back to 115 again, you could look at a target of 125, or more aggressive, you could target 137 in the short term. Just depends on how comfortable you are with that risk management as a trader. But let me just pull up another stock. I think Spot's been doing good this year, so let me look at Spot. Okay, so Spot's a pretty good chart to look at here. If I go back to the year to date, yeah, this is what we like to see here. Basically a straight line up. No big impulse to the upside or downside. The reason we like that, applying our fib levels, is because it gives us a little more practicality that this fib level is still in play. So if I go here, and then I go down here, we can see that Spot is getting ready for a nice buy zone at 61.8, because look where we actually had a little resistance and support right here at the 61.8. So 272 is going to be a great buy opportunity for Spot if it sells off to the 280. If it doesn't, well, we might have to just wait for an opportunity in the future. But we can still utilize this as a day trader, right? Let's go to the 20-day 1 hour. So, perfect example here. Let's assume that we're only looking right here. All right? So we don't know what's going on. We just know that earnings came out. All right, earnings is out. It's earnings season. Yay, happy doo-dah. Well, let me get a little bit better for us. Oh, can't go that far back. Maybe 10-day, 30-minute. Okay, there we go. All right, so earnings is here. Let's see. All right, right at the market open. Ooh, I see a big spike. Let's draw the fib. Let's see, my fib pre-market was here to here, so that was the real earnings move. So it looks like my top was 341, my low is 287. I should be looking for a buy at 320 if it holds. So I zoom out, zoom in, or scroll down. Let's see, nothing there. Nothing on the first day. Oh, dang. Let's see. Let me go back where we can really see it. Nothing for the first few days, but hey, I'm going to set an alert. So what happened is you draw your fib, you set your alert for that 61.8 zone, and then 4 or 5 days later, bang, something happened, your alert went off. Oh, let me look at spot again. Well, look, you have a great entry for a trade right here because off that first impulse, we came back and we tested that 327.3. You might be asking, why didn't we draw it up here? Well, that's not our impulse move. Our impulse move was this big one candle here. So if we want to trade the momentum based off this impulse, looks like they beat earnings, looks like some price targets or something came out, some news articles were like, okay, it's a great time to buy. And if you look, we were to target here, our entry here, and target 100%, that's going to be a $20 move in just 2 days as after we actually tested this Fibonacci level, we came back and we touched 340. That's the power of Fibonacci retracement is. It doesn't have to happen right that second, but if you keep this pulled up and turn on your alerts, you can see great entries, maybe not today, but later on. So, rule of thumb is, hey, use this on earning spikes. Plot the high, plot the low, wait for that 61.8 confirmation and execute a trade. Or long-term trading, plot it out on whatever your chart is and see if that correlates with any other technical analysis such as your MACD, your TTM squeeze, or anything like that. Guys, I just showed you 3 random stocks that happen to line up and be Fibonacci retracements. You can draw this on any chart you want to, and you will see some correlating patterns to where you're going to statistically win more than you're losing. So if you go through, give yourself a great execution strategy, and respect your stop outs, you're going to see that account grow. But also understand that there's more ways to give yourself a trading edge. All right, you want to figure out where's the impulse moves happening. Well, go to the news tab on TradeUI and figure out what's getting talked about today in the stock market. That way you can figure out what tickers are getting talked about and what's the news articles really causing those spikes. Maybe you want to learn, hey, are people bullish on stock long term? Go to ChainViewer, see who is holding actual option contracts to figure out where's the open interest on different stocks. You know, CleanSpark, for example, has earnings on the 7th. Looks like we've got a lot more bulls than we do bears on CleanSpark right now when it comes to open interest. You can see a spike up to 18. If we go further out, you actually see people are going to buy all the way up to $30 a share on CleanSpark. But understand that there's multiple ways to give yourself a trading edge. At the end of the day, learning tools like this is how you become a better trader. Fibonacci may not be for you, but it is going to be for a lot of traders. So reference other videos out there. Reference the technical analysis videos that we have on our channel as well. That way you can give yourself a trading edge. And don't forget, guys, there's a link to TradeUI that you can actually join and get a good discount code. It's 10% off. If you join that and use that discount, it's really going to help you. And we also have trials you can try out. So just try out the tools for yourself and see if you become a better trader. Because if you do, we're just here to help you. But guys, I'm going to end the video here and wish you the best of luck.